course. Our alpha manager is Aditya Sood, portfolio manager at InCred PMS. Aditya, good to have you with us here. Thanks very much for your time. I think in our conversation earlier, you had mentioned that you own Tejas Networks, and you you said that you added onto that name. Stock's done very well. We had the management with us early on as well, talking about the business opportunity. How is it placed valuation-wise? Just talk us through your thought process. FY25 is going to be another very large year because of execution of the remainder of the BSNL contract. That should be worth about 7,000 crores. Just that order. FY24 revenues were about 2,400 crores. Your thoughts on this one, Aditya?
Sure. So, we have been fairly constructive on the prospects of, manufacturing, as a theme. And obviously, Tejas benefits on two accounts. One is the PLI bit. Obviously, they get 6% PLI as a percentage of their overall incremental revenues. And we have seen PLI flowing through in the last quarter. Very notable fact is that, Tejas was under tremendous pressure for last 4 or 5 or multiple quarters on account of, elevated semiconductor cost. Which is essentially a raw material for them. And we have seen that normalize in this quarter. As far as the ramp up is concerned, I think so it is a very well acknowledged fact by the street now that they have only executed 10% of what needs to be executed. More importantly, in terms of capability, and that is where the key lies. They have been a very successful fixed line company, telecom equipment manufacturer. But wireless is something that they are doing for the first time, and BSNL is a very large order. Now, if you look at the spec of their tender, 4G upgradable to 5G over a period of time. And what they have mentioned is that, essentially 40% of the 1 lakh towers that are targeting would be upgradable to 5G. And then there is an element of AMC cost as well. All that... with everything put together, I think so there is a long rope in terms of, the order backlog that they have. Order backlog has gone up 6x, ever since the Tatas have acquired the company. More importantly, this is about stepping up the wireless capability. I think so the stock will do reasonably well. It is a well-acknowledged fact that possibly, you are looking at next 6 to 8 quarters execution to go through, and profitability is going to be in the range of cumulative profits could be as high as, 1,000 crores. That is what our estimate is.
Aditya, hi, good afternoon. Great to have you on today. I also recall from our last conversation, you were telling us that you're actually taking a favorable view on some of the FMCG names as well, some of the consumer names. And now we're running into the season. Now, I mean, not to get stock specific, but obviously Tata Consumer flagged off some concerns because that's a little more discretionary, the beverage side of their portfolio, and there the numbers were not as good as what the street perhaps had in mind. But what are the expectations that you're going with? I believe you added HUL, if I remember correctly, maybe even Dabur, you have that in your portfolio?
Yeah, that's correct. One is that, we have got this belief that, if one has to buy, if one has to buy great companies, and typically, consumer has been a great story in India to be placed as a, investor, you have to buy them when there are headwinds, in the sense that, most of the multiple compression is behind you. A lot of the consumer categories, depending upon, whether we are focusing or whether we are talking about, consumer staples or low unit consumption here. I think so. We have already seen 6 quarters of slowdown playing out at this juncture. Our view is that, possibly you will see some rebound in terms of volume growth. There are early signs of that playing out. There is some bit of respite with gold going up and with balance sheet repair, which is going to, obviously lead to, respite for the rural consumer particularly. Also, rural wages have, just normalized in the sense that they are back to the pre-COVID level. So our view is that, valuations are much more reasonable. Volume growth should do well. And any which ways, consumer is a defensive sector to be in. With, sector having massively underperformed for last 18 to 24 months, we believe that there is an opportunity to, allocate some money or to be overweight on low unit domestic consumption names.
Okay, all right. Hi, Aditya. Good afternoon and good to see you, Ben. What else do you like? Consumption at the lower end has slowed down, but the upper end, it's everyone wants to consume a better brand, whether they are it's in terms of apparel, watches, liquor, whatever you refer to. How are you all playing this theme of the luxury segment doing much better?
Sure. So, we have exposure in, Arvind Fashion, which we have recently invested into. I think so. As you rightly mentioned, there are some categories wherein there is down trading happening, but at the same time, what we are witnessing is that there is up trading which is happening as well. So we like Arvind Fashion in this space. I think so. They have got a very good franchise of brands. They have, sort of. Whatever mistakes that they have done in the past, in the sense that they have done away with Unlimited, which was obviously they were losing money. They have rationalized the brand portfolio. We believe that the return on invested capital can improve very sharply from here on. The valuations are very, very attractive. So we like luxury consumption also as a play. The only thing is that if we look at companies like, for example, Landmark. What one has to be mindful is that a lot of these luxury consumption businesses are cyclical. So the first point that we would have to figure out is that whether we are at the top end of the cycle, and the answer really lies is that whether you want to allocate as an investor for next 3 years or possibly next 5 to 7 years. I think so. Luxury has a long way to go, and the way. It has been demonstrated in certain categories, like including watches, for example. I think so. The category has legs to it. There is no doubt to it, and this is the first time wherein we are experiencing larger luxury players, let's say Louis Vuitton or a Rolex, taking a market like India very, very seriously, and that gets reflected in the footprint that they have in India.
Since we're on the subject and you mentioned Arvind Fashions, I must ask you about the Aditya Birla Group's own sort of moves on this front, right? Maybe they took a lesson from the Tata's books, seeing what happened to Trent, and now we have that business demerger, getting along. Any thoughts? I'm not asking for a stock recommendation, but just any thoughts on how this other business conglomerate is now looking to unlock more value? Do you think that can happen? And in terms of valuations, I mean, I don't know, was Trent a very unique phenomena, or do you think something like an Arvind Fashion or even an Aditya Birla, fashion retail, it can actually scale up in a similar way?
So if you look at Surbhi, essentially the evolution of West Side in this country, right? The key lies in how much is full price sales for a retailer. So as a West Side consumer, you always felt that possibly you never felt the need of having a discount if you walked into a West Side. And then there was a fast fashion learning as far as Zara is concerned, and this is what they have tried to implement in Zudio. And obviously Zudio has been a huge success for the Aditya Birla Group, and that is why for Tata's essentially. So our view is that once you see full price sales going up in any format, and once you see right sizing of store footage area, that becomes a very, very powerful combination to consider in a retailer, essentially. So as far as more focus on productive capital allocation is concerned, and what we are seeing in the case of Mudra, all those sort of moves are very, very welcome as far as the market is concerned, because essentially what we are trying to analyze as investors is that how many brands are scale and subscale. At the same time, we also want to see sharper focus in terms of return on capital employed. When large fashion house like Aditya Birla Fashion is allocating capital, because they will typically have multiple brands. So sharper focus is always welcome in terms of either the multiple re-rating or earnings growth potential.
Okay, all right. Aditya, we'll leave it there. Thank you very much for your time. Good speaking with you, and appreciate you joining us here on CNBC TV18 today. Well, I think the market is...
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.